Hey everybody, Gary with Basecamp Trading. Let's take a look at how we were trading crude oil in the London session this morning. When we first came in the morning, we were on this magenta bar right here. All of our moving averages were in alignment to the upside, so we could definitely tell that crude was in a bullish mode and we were looking for upside targets. Our 34 EMA was above our 50 SMA, which was above our smooth 50 and above the cloud. And we were on this bar. The problem is this bar really isn't a setup bar for us. We hadn't pulled back into the 34 or into the cloud. Typically, we would look for some kind of a wick out of those areas to take an entry. And on top of that, crude had been consolidating for a very long time. In fact, this magenta bar went a full 2 hours plus. So it had been consolidating on this bar, but we just did not have any kind of a setup. So we took a look at our higher time frame charts to see what was happening there, and we were actually getting a signal off of that. Initially, the 30-minute chart had given us a signal right here on this little hammer, but it was early on. We were reviewing charts and we didn't catch it. We just missed the trade. That was a signal for an entry above 59.52, but we did not catch that particular trade. Again, we were reviewing charts and we were late and we missed it, and so we don't want to just chase because the signal had already been triggered. What we did do is look at our 240-minute chart. The 240-minute chart was setting up a bull flag. It had not triggered yet, but it was going to trigger at 59.56. So we knew at that point, okay, well, we have a trigger off the 240-minute chart that is in confluence with a trigger that had already taken place off of the 30-minute chart. And typically, these types of confluence are the times we look for larger moves. Now, London's been a little quiet lately, and we didn't get a huge move off of this, but we did end up getting a pretty nice move off of it overall. Initially, we came in, entered off of that 240-minute chart at 59.56. We moved up, took a couple targets off, consolidated, and set up another bull flag right here off of the 30-minute chart where we added to our position. This triggered at 59.74 and was good for an additional two more targets or $200 per contract on the addition right there. And we were managing that off of the Unirenko chart the whole time. And you could see we just never got any kind of a real pullback or any kind of an entry off the Unirenko charts, but we were able to use our higher time frame charts to add to our position and give us an initial signal. That first entry at 59.56 was good for 4 targets or $400 per contract. We added right in here on that 30-minute bull flag that triggered for another 2 targets or $200 per contract. So at least the very minimum we should have had, if you're only trading one contract, was 400 contracts on your initial, $400 per contract on your initial entry, $200 per contract on your secondary entry. So a minimum of $600 trading crude this morning. Again, London's been a little quiet, but if you can make $600 per session, that's not a bad morning's worth of trading.